Welcome to the Investment Clinic Live today. My name is Brenda Zavoros. I'm the founder and CEO of the Ground Up Project. I'm very pleased to have everyone on the call today. We are very lucky to host SergiuNegut. He is a business angel from Romania. Welcome, Sergiu.
Thank you for the invitation and congratulations for the project. It appears to be very dynamic and very interesting.
Thank you very much. A quick word about the Investment Clinic. We have noticed that a lot of the ventures that are looking for funding fail to access the financing that they need. And one of the key reasons for that is investment readiness, preparing and their fundraising correctly, understanding what investors are expecting from them, making sure that their financials and their pitch decks and their teasers are all good. The Investment Clinic is a project that helps entrepreneurs with these issues. You can get tailored consultations to work on your business, and as well as access investor lectures and the Investment Clinic Lives, where each month we're hosting a guest investor for 30 minutes and you can ask questions. The Ground Up Project is a deal sourcing platform. We're scouting for companies that are doing good in social and environmental issues, for-profit businesses. We are also now on our the newest iteration of the platform, allowing advisors and investors, as well as other intermediaries, to share deals. If you're interested in these new features, take a look at groundupproject.net. Now, Sergiu, you're an angel investor, you're a consultant, you're a multi-board advisor, you're also an associate dean of entrepreneurial growth at the Maastricht School of Management in Romania. You're a well-known speaker. You speak a lot about growth management and entrepreneurial issues generally, but also particularly around Eastern Europe. You are a business person yourself with a great experience, and you were the executive director of a network of hospitals, private hospitals in Romania, where along with the founder of the clinic, you helped grow the company by more than 10 times. And so you have seen how companies grow, and you have also helped in your second life as business angel. A lot of startups grow. You have experienced an exit in your portfolio, and so we're very excited to hear a little bit more from you. It is the first time we speak to a business angel at the Investment Clinic. And so I'd like to ask you as a first question, what is the role of an angel investor?
Thank you for the eulogy. I feel a bit embarrassed because it's none of this is my success. I'm the follower and the supporter, and what I prefer to call all these together, the previous management experience, the teacher experience that I have now in academia, the consulting, and the business angel, is a sort of growth expert, growth advisor, because my business is to help other businesses grow, and I do that in multiple ways. And probably the one that is the most rewarding is the business angel investment activity. And this is not only because it's rewarding to work with nice entrepreneurs, but ideally there would be a number of exits that would give a nice return for my investment. And of course, that would be, there is only one way entrepreneurially to make lots of money at one point, and that's obviously the exit. So every time when we angels look at investments, is in fact, to be frank, not driven by the idea of let's help some guys grow their business. That is very nice, but we can also do that with mentorship programs or coaching programs and something else. It's actually for us, together with the founders of a business, to get rich one day by selling that business to a third party. So the role of the angels ultimately is to bridge between the initial startup phase, when the founder would raise money from family and friends, and played the role of the third F, played the role of the fools that would, choose to believe and chip in and help with networking, with relationship, with business understanding and strategy, and advisory and support whenever that is needed, but with the purpose of getting the company to the next level, to the next financing round, if that is the case, or getting the company to profitability and making sure that there is a route to exit.
That sounds good. And then when we were preparing the session, we talked about the fact that angels sometimes bet on ideas, and you said, no, actually it's more than betting on ideas. Tell me a bit more about that.
I think there is a traditional way of looking at business angel investment, where you would have these very large angels that have inherited or made lots of money, and then they choose to spray and pray as a strategy of investment, which means that they would be putting relatively small amounts in a large number of investments, like 30, 40 or so, and then pray that this will eventually give them the profits they want. Now, I see people moving away from that kind of scenario for a number of reasons. One reason is that it has become, in more and more geographies, easier to attract small amounts of money in the form of grants, in the form of public financing programs, in the form of access to accelerators. They all give very small amounts of money, like 10,000 or 40,000 or that kind of magnitude. And you reach those amounts, and they have something like an educational program, like startup consolidation program attached to the money. So I'm in a situation where I can only help with something that is not exactly on that level, but probably on something more. And that something more includes knowledge. So there is something where the business angel that you want in your company can also serve as an advisor. So there is some knowledge of business development, of specific industry, of knowing other people that you want from your angel, which kind of makes the angel not only in a position to bet on an idea, but to understand the business and bet on the team, the business plan, the market opportunity, bet on the business as a whole. It's the idea. If you ask pretty much every other angel that I've met, they will tell you how important is the idea. Not so important, because at the end of the day, it's, getting an idea that is right for the time to market, but it's executable by some people who have the execution ability.
So in that sense, can anyone be a business angel? You hear very often, if I have someone who's willing to invest something in my business, should I consider that they're a business angel?
Yeah, I think so. In fact, frankly, when I started investing, and I had like 2 or 3 investments, and people asked me, so you're a business angel? I said I was kind of, not really. I'm just, investing some money and helping these guys with advices and so on. But it appears I was in full denial, because at the end of the day, this is what business angels nowadays do. So finally, I came to the acceptance of the fact that, I'm a business angel, so this is what I do. And by the way, most of the other business angels that are active in the business, they do the same thing. They kind of play a role on the advisory board of the companies that they invested in, or they individually coach or mentor the founder, and it's about the same thing. So I think many of us start with the idea that, why don't I, just make an investment in this particular opportunity that I see with this team and see how it goes. And then there is another one, and then there is another one, and then suddenly you're known of doing it, so more opportunities come to you. And but it all starts like that. And I think also that, the current business angel is not only the, traditional, Google employee of the first 100 or something like that, but pretty much everyone that has saved some money, not necessarily huge amounts, but has saved some money in different ways, and is thinking to do something with the money, which is not, the traditional, let's say, money put in a bank account, in a bank fund, or in the traditional real estate kind of developments.
Yeah, especially
I syndicated
nowadays.
first. Yeah, so I syndicated a number of investments, and in many cases, for the people that I brought on board in the investment, it was their first investment.
I also hear you saying that actually you have to be willing to also take the risk alongside the founder, and also put in a lot of work as well, give your expertise so that the success is a shared success eventually. Now we've received some questions from participants who signed up, so we have some questions sent beforehand, and we're going to move to those. But I just wanted to remind everyone that if you have questions as we go along, please use the chat window, and I will be keeping an eye on it along with my colleague Neil, and we'll try to get as many questions as possible answered today. So very quickly, here's the first one. What do you investigate or check first? The team, the market, the trends, the traction? Anything else?
I don't think it's a matter of checking first. I think every founder has to be able to put together the 30 minutes, the elevator pitch, or the 3 minutes elevator pitch in a pitching contest or something like that, that would attract the interest of business angel for a next round of discussion, for let's say for the 1 hour meeting. But in the 1 hour meeting, you just get a flavor of what the business is about, and but this is not like necessarily leading to investment. So it's not a hierarchy, because in your mind as a business angel, you need to tick more boxes, and obviously the boxes include the team, their knowledge of the industry that they are active in, their ability to work together as a team, their ability to actually run and manage a business, and their ability to stay together through good and bad times, and their ability to work together with you as part of the same team. So obviously you don't assess that, by, checking or making a very superficial due diligence. But at least in my case, what I start doing is, okay, let's entertain some discussions. How do you think about this? How do you think about that? So it will not be like, okay, very good. I had a 1 hour meeting. I throw the money at you. Goodbye. Call me in 5 years when you do the exit. It doesn't quite work like that, or at least not in my case, and in the case of the people that I know. So yes, it is the team, it is the market, it is necessarily the route to exit. I have to imagine a credible route to exit for that business. I think it's important to understand also that there is ideally a sort of wave trend in the market that this is a part of. So there are more businesses in that space that is sort of fashionable. And this is important because this is what ensures the next rounds of financing and eventually the exit. So I think this is altogether. Then there is another thing that is important, is your ability to contribute with a relevant amount. And in my case, my ability to contribute with something on top of the invested amount. So
and how short is the time horizon to exit for you? How short should it be for business angels generally?
I think we're looking at exit maybe in 5 years, maybe in 7 years, when we first invest. But more important than that, we are looking for this to be part of a series of investments. So by the time I've put my money in, I would expect that I have a route where I understand what will be the next investment round. And I would see that the money that I'm investing would be enough for the company to make it to the next round. And the company would be eligible for a next round investment. Now, right, whether that next round is something that, is kind of final with a like an IPO or something, that can also happen. But more likely, it's going to be a professional investor, like an institutional investor. So it is part of the angel's effort to prepare the company or help prepare the company for the next round.
Mm-hmm. Now, here are two questions that are relatively similar, so I'll bundle them. What do you expect a company to prepare for you? And I suspect the question, because it came from a startup, the question is obviously to get to the meeting, right? So what should you see in order for you to get to the meeting? And then within that, what do you expect in return? I think you touched a little bit on it, but perhaps you can say, what are the typical types of returns on investment that would make you want to be interested in a company?
Okay, good. So, what do I evaluate? Frankly, I evaluate a business opportunity and a team of people, and it's quite subjective to get to the first meeting and then so on. So does this business make sense for me? Yeah. Does this team, would I like to work with these guys? Would they like to work with someone like me? Okay, then probably we can move on if that is the case. So I'm afraid it's not very formal. It's not like ticking a million boxes like have in the formal applications that the accelerators would create for you, or maybe the venture capital will create for you. Yeah. But it's also because the business is earlier stage. So yeah, I will look at some point that you understand what a business plan is, and I will look at some point to see that you are coherent in your assumptions, but not at the very beginning. Now, what you have to understand that angel investors invest typically at a stage where the risk is huge. So, and also invest relatively small amounts. Yeah, relatively small amounts. I would say, at least for the area that I'm in, I would say from 20 to 200,000. Most of them. You would have some super angels that would invest 500,000 or 1 million or so, but these would be more the exception than the rule. So, yeah, we would invest expecting huge returns from the successful companies. Now, huge returns means that in my portfolio right now, I have 4 businesses that have grown at least 20 times in terms of revenue to the from the level that I invested. So right. Is that 40 times in the value that I have invested? Probably not. Because at the beginning, there is a value that is placed on the idea, and you just have to prove that you're able to make revenue, not necessarily to really make commercially viable revenues.
Right.
But it's that kind of multiplying effect that you want to see for your money. Because if it's something that would grow only like 5 times, probably the business opportunity is not attractive enough to justify the risk of investing in an early stage company.
Right. Now, here's a question that came, and thank you for that. Here's a question that came on chat from Frank, from Waterpreneurs. So, do you know any business angels that are also interested in impact? And so in that case, do their criteria, so by impact, understanding impact on society, impact on environment, in addition to actually realizing their financial performance. And in that case, do you think criteria for business angels are redefined in their investments?
That's a very interesting question. There are less of these in the region where I come from, and but angel investors are humans, with some particular traits, but they are humans. So they typically invest in things that they care about. Sometimes they invest in things that are close to their passion, close to their expertise. And sometimes if they feel that, they owe the society some good deeds, they would invest in impact in social enterprises. It's very complicated because it's this continuum. Of course, you pitch to individual donors when you have an NGO, and individual donors would put money in. And you pitch to angel investors in the traditional form, say the traditional business idea, and they would pitch only for profit. Sometimes they would be maybe the same people. So the opportunity to build this, if you want, missing link of impact investment is there. Nevertheless, that being said, from my experience, impact investment is actually smaller in amounts raised than pure donation, which is smaller than traditional investment.
Right, that makes sense. Now, here's a very specific question. Now, how do you evaluate startup risks?
That's a very difficult question, and and a very smart one as well. You start with the assumption that the business is very, very risky. So you look at everything that you can do in order to de-risk that. Having a sort of, I have this business opportunity that is perhaps exponential and can deliver lots of money, but if things don't go that well, it's not going to be a total disaster and I can get my money back. Well, that would be a very, very interesting situation. Is there something that, unless if it doesn't accelerate to be financeable by VC, can it grow to the size where it's a mid-sized business that can operate a decent profit and distribute dividends and so on? That may be also an interesting possibility. But this is one way to look at it. The other way to look at it is, okay, I'm de-risking the business by simply investing in more businesses in the same sector. Yeah. So I would rather than investing in only one, I would invest in 5, and then my chance of hitting one that is a good opportunity is there. And this is what angel investors that invest already at the pre-revenue level would do. Yeah. So if you there are a few that would invest from the concept phase, like the drawing board, and not expect that the commercial model is validated by some initial customers or something like that, and then they would go and evaluate the risk more on the by building a portfolio, or mitigate the risk by building a portfolio. Otherwise, it's how reasonable the market is or is expected to grow, how reasonable your expectations are to reach a certain market share of an existing market, of growing market in the making, so to speak.
Right. It does come to what you were saying initially, which is that you are taking a significant part of the risk, and that the more you do it, the more you get the feel for how how things may or may not work, and that it is definitely not an exact science. I'm curious, with respect to what you were saying just now, do you as business angel connect or build relationships and maintain a network of VCs as well? So in other words, do you also know and connect with others in the market who then can be the later stage funders in some of the businesses
yes.
that you
yes, the short answer is yes. Mm-hmm. In fact, it's a symbiosis. Many times the VCs would seek angels to co-invest if they have the right background or the right knowledge in their businesses, or even recruit sometimes angels for or other specialists for their background in the advisory boards for the companies. So I think it's a sort of mutual recognition and participation in the same ecosystem.
Right. So somebody was asking, how do entrepreneurs find and approach angel investors?
I think the best thing that you can do. You found me, but I'm not enough. Definitely, the best thing is to look for business angel clubs or pitching sessions that happen in your area, in your geographic area. So go visit those, see who shows up pretty much every time, approach them, ask them if they would be willing to listen to your idea. They might participate in those pitches, see if anyone would ask you questions after that. This is, I think, the best approach. That's one route. The other route, which is about the one a bit more adventurous, so to speak, is the route of build your own angel investor. So look for people that have made money in an area of expertise that you would value, and approach them directly.
Good.
I am seeking an investment in a particular idea. What do you think? Yeah.
I hope people are taking notes.
Because I think it's actually both ways that you can reach the angels.
Right. So convince
and
someone
sometimes
that
angels will. Yeah.
Sorry, go ahead.
Angels will just pull together and syndicate. So if an opportunity comes to me, I think I'm not the best equipped to play the role of the advisor, but I think it's a good business opportunity. Maybe I will definitely call someone from my network and see, look, can you make any sense out of this? Can you meet these guys? And so on. And then, make sure that if you do make an investment, put me on the list, and I'd like to co-invest with you. I mean, this is the way it works. And that's why you have all these business angel clubs. So it's not like you have to, seek people who would declare themselves angels on the LinkedIn profile, and write to all of these, although, well, who knows, but rather, try to identify those that you would want to be your partners. Because it's not, once again, it's not people that you just take their money and forget about them and hope that they will not call you for the next 5 years. You call them when you sell the business. It's not like that. You are going to be partners. So make sure that you get the right partner.
Right. We've heard this over and over and over, how important it is, the relationship with your investor, and how important is the non-financial support that the investor brings through their experience and so on. Now, if magic happens, so to speak, how long does it take for a deal to be concluded on average?
Months. So I have not seen, actually the if you want, the side effect of the very short answer, months, is that you should not seek funding when you're in desperate need for funding. You should seek it long in advance, plan for it. So because it takes months, and also many of the business angels would not, so how much have we agreed on? Something like 100,000. Okay, here's the money, bye-bye. On the contrary, they will say, okay, so when do you need the money in the business plan? That would be 20,000 this month, 20,000 next month, 10,000 then per month until we break even, or something like that. Okay, now let's see how that works according to the business plan. So are you able to make that business plan? Or as we move forward, we realize that, you're just burning more and more money, and burning more and more money doesn't bring more and more business. So maybe it's not that good an investment as I thought from the beginning. So you see, sometimes you will have to make a promise, and your promise is the business plan, and the investor, the angel investor, will reciprocate that promise with a promise in money for the subsequent rounds, and allocate it over maybe 6 months or a year.
Right. Now, we've heard this also from, I think it was Piers Cumberledge in his investor lecture. He was saying you have to have at least a runway of 6 months, a minimum runway of 6 months ahead of you to when you start fundraising for your next round. Is that something that you would agree with?
Fully agree.
Okay. Right. Now, here's another concrete question. How to protect business plan sharing outside an NDA? It's an interesting question.
I wouldn't be worried. As I said, idea is not very interesting. Unless you have something that is, a fabulous patent that can be sold by itself, which I doubt you have typically. Selling just the intellectual property with absolutely no business attached to it, then of course you can protect that with a patent. But other than that, I would share information, because once again, you either found your partner and then you have to share your knowledge, or you don't, and then you are not going to build the necessary confidence without sharing your business plan. Yeah. So let me add something to that. Look at what the business angels do. Are they in the business of stealing the business ideas of the people pitching to them? Not at all. The typical business angel would just stay away, contribute as much as they can at the advisory level, but not get to run a business. So I would say that unless, once again, you have seen this done by a particular person and avoid that person, in 99% of the cases, this is a non-issue.
Right. Now, I'm conscious that we're getting to the end of our window of time today. So I'm looking among the other questions that were asked. There is a question about investing in difficult contexts in developing countries. And I think you mentioned quite clearly at the beginning that that is not an area of your current expertise or investment. So perhaps one last question. I know you're not for the moment involved in green investing per se. There is a question here that asks if you are investing in seed funding for establishing a green fund. I'm curious though if impact or green per se is an area that is of interest to you, perhaps for future exploration.
Well, I can only answer once again, people invest in something that they deeply care about or they have knowledge about, and typically it has to be both. When it comes to green, I know some people that are really into green stuff, so I would automatically defer these things to them. More generally, an impact investment, if it's about, let's say, I don't know, education, for instance, which is an area that I deeply care about, then probably it would be the other way around. So it depends on the flavor of the impact investment. Yeah.
Right. Exactly.
So and that is one thing. The other thing is on the investing in a fund is different from investing in a company. Some angels would invest in funds as well. Others, like myself, would only invest in companies. Why? Simply, I'm not rich enough yet to have a fund as an in-between to connect me to the companies that I invest in.
Because of the minimum requirements.
So it's not only about the minimum requirements. It's not about the sheer size, but I think at this moment I'm better off choosing and helping the companies that I invest in than trusting others to do it as part of a portfolio. Yeah, probably at some point that stage may come, but it's not that case. So you have to look, I think, at what's the fortune that these people have made and the level of risk that they're willing to take. The level of risk that you take by investing in a fund is smaller and the returns are smaller. Yeah? I'm talking about a fund as a whole. Yeah? And when it goes to impact investing in a fund, it's something where everything is part of a social contribution that is bigger than the financial contribution anyway. So it's a completely different story. So in these cases, for instance, I prefer to be present in areas where I can help with my knowledge, with my expertise. I mentioned education. Probably that's my area when it comes to social and impact investment.
Education, health, I would add, which is another important
as well,
area of impact. Yeah.
Agree.
So meanwhile, we wish you a lot of success with all the businesses that you are helping today and that you will continue to help. We will continue to keep an eye on how you're doing and what other great startups you will be supporting. And thank you so much for taking the time to speak with us today.
Thank you as well. I enjoyed very much the conversation and the questions. And good luck to the participants with all their endeavors. And good luck to you with the project.
Thank you so much. Just to let everyone know that if you'd like to continue to ask any questions, we're happy to get them by email at neil@groundupproject.net. At the Investment Clinic, stay tuned. In October, we are putting together an event in Lausanne where we will host Xavier Pierluca for our next investor lecture. There will be a Q&A followed by a networking lunch. And at the end of November, we're excited to announce 20 to 21st of November, our first Impact Virtual Summit on investing in the circular economy. Lots of opportunities to pitch, to network, but also to be part of the learning labs for entrepreneurs where you can work on your financials and your fundraising preparation. You can learn how to make a simple and effective marketing plan. You can learn to evaluate the impact of your business. This and many more at theinvestmentclinic.com. So thank you again for taking the time to join us today, and we look forward to hosting you the next time. Bye-bye, everyone.